One of the aspects in preparing a multi-step income statement is that we came down to income from continuing operations. And what this tells users of the financial statements is these are the expected income from continuing operations. But what happens if we have operations that aren't going to continue? What if we have a segment of the business that we're selling off? How do we want to report that to our shareholders? So this next video is going to show what we do with discontinued operations. All right, so let me close this tax return. I'm going to basically condense this. So we're going to start out with a new, assume this is one big income statement, but I am going to then just transfer this up to here. So we still have Scotus Beverages. They have their income statement and the income from continuing operations. And now what's happened is Scotus has a trucking division, okay, and this, because they've always basically shipped and trucked all their own teas and juices. Well, one of the things they've decided to do is they decided that their business is primarily focused on making teas and beverages. It's not on the trucking. And they can actually find someone else and pay them to ship their goods for them and focus all their energies on producing tea. So they've decided to sell their trucking division. And when they sell their trucking division, one of the things, their first calculation they're going to make is what's the operating loss on that division to date. So for example, this trucking division not only delivers teas for Scotus, but it delivers for other companies too. It takes on some extra business, and actually the operating side of the business maybe charges, the trucking division charges them to deliver. So what we do when we discontinue an operation, the first thing we do is we go in and look at all our regular sales and all of our regular expenses that we've had throughout the year, and we extract out all those related to the division we're getting rid of. So for example, if the trucking division had any sales numbers, it won't be in here. It will be completely extracted out. If the trucking division has any of these expenses, we would have extracted all the expenses out of here, and what we're doing then is reporting all the revenues and expenses for the trucking division in one number. Okay? One single number. The next piece then is when we actually sold it, we're actually sold it at a gain. So what it was for on our books, and again, I don't need to know what this is at this point. I just need to know I sold it for $37,000 more than was on my books. So what happens with this? Well, in this format, the first thing we do is we look at our operating loss from discontinued operations, or it could be a gain or a loss, right? In this case, it was a loss. We have an operating loss of $50,000, okay, and we have a gain on the sale of $37,000. So, I should put negative around this so we know what we're looking at here. So we have a net loss on discontinued operations. Well, we have a loss on discontinued operations. Let me take the net out here. Loss on discontinued operations of $13,000. Now, the other thing we do with discontinued operations is we include the tax effect. What that means is if we're pulling out all the revenues and all the expenses out of the regular income statement that comes down to income from continuing operations, we also want to pull out the income taxes associated with that. Well, if we had a loss on this, right, a loss is kind of like an expense. This is actually going to give us a tax benefit. We can actually deduct this loss on our tax return. So we would actually take that $13,000, multiply it by our tax rate of 30%, and we have a tax benefit in this case on this loss from discontinued operations of $3,900. Okay? Because it's a loss, it's going to give us a tax benefit. So my total loss from discontinued operations, my total loss, right? Net of tax is $99,100. Okay? So that's the number then that's going to show up and be reported on our income statement. And how are we going to report that on our income statement? Well, it's once we've done our calculations, it's fairly easy. We would report income or loss from discontinued operations. Discontinued operations, and I'm always going to report net. And that tells the reader of the financial statements that it is net of tax. So I'm going to report that number there. Come up with the subtotal, and the next line then is income before extraordinary items. Extraordinary items. And that's the next line. That's the income number from and that's 31,500. Okay, so that our income before extraordinary items is 31,500, which leads you to believe that the next video is going to talk about income or losses before extraordinary items.